Every business owner wants to succeed, but not all are equipped with the financial insights needed to thrive. Accountants, often seen as number crunchers working behind the scenes, are actually key players in the long-term health of your business. They see what works, what fails, and what can silently wreck your finances. The truth is, there are things accountants wish their clients understood early on, things that could save money, reduce stress, and fuel growth. In this video, we'll uncover the top 10 things accountants wish you knew as a business owner so you can take smarter steps toward long-term success. 1. Profit doesn't equal cash flow. Many business owners get excited about seeing profits on their income statement but don't realize that those profits may not be reflected in their bank account. Accountants constantly wish their clients understood the difference between profit and cash flow. Profit is what's left after you subtract expenses from revenue, but it doesn't account for the timing of payments, unpaid invoices, or major purchases. Your business can show a profit while still running out of cash, a scenario that can lead to disaster. Cash flow management is just as critical, if not more so, than profitability. 2. Mixing personal and business finances is a huge mistake. Accountants consistently warn clients against mixing personal and business finances. Using the same credit card for groceries and inventory, or depositing business income into a personal account, can quickly turn your books into a tangled mess. This not only makes tax time a nightmare but also increases your audit risk and limits your ability to track the true performance of your business. Accountants want business owners to open separate business accounts from day one. It helps maintain clarity, simplifies bookkeeping, and keeps your financial records clean and credible. 3. Bookkeeping isn't optional. Many entrepreneurs treat bookkeeping like an afterthought, something to do at year-end or when taxes are due. But accountants know that accurate, timely bookkeeping is the backbone of smart decision-making. Without up-to-date records, you can't properly manage expenses, project growth, or plan for tax liabilities. Accountants wish business owners would invest in good bookkeeping practices early, either by learning the basics themselves or hiring a professional. Clean books save time, money, and stress, and they provide the data you need to grow your business strategically. 4. Receipts matter more than you think. Throwing receipts in a drawer or assuming that bank statements are enough is a big mistake in the eyes of any accountant. Receipts are your documentation. They prove that expenses were legitimate and business-related. Without them, you could lose valuable tax deductions in an audit. Accountants recommend using digital tools or apps that scan and store receipts, categorizing them as you go. Even for small purchases, keeping proper records can add up to big savings. It's not just about staying organized, it's about protecting yourself from penalties. 5. Tax planning is a year-round job. Too many business owners wait until tax season to talk to their accountant, but by then, it's often too late to make significant changes. Accountants want clients to understand that tax planning should happen throughout the year, not just in April. Regular check-ins can help you make strategic decisions that lower your tax burden, like timing expenses, managing deductions, or adjusting payroll. The best way to avoid surprises is by involving your accountant proactively. Treating them like a strategic partner year-round leads to smarter moves and fewer regrets. 6. You can't afford to ignore payroll compliance. Handling payroll correctly is more complex than just writing a check. Accountants frequently see small business owners make costly mistakes when it comes to payroll, misclassifying employees as independent contractors, failing to withhold the right taxes, or missing payroll tax deadlines. These errors can lead to IRS penalties or lawsuits. Accountants wish more business owners took payroll seriously, either by using a professional payroll service or ensuring their systems are up to date. It's not just about paying your team, it's about complying with the law and protecting your business. 7. Your business structure affects your taxes. Sole proprietorship, LLC, S Corp, C Corp, these aren't just labels. Each structure comes with different tax rules, liability protections, and paperwork requirements. Many business owners choose a structure without fully understanding the long-term consequences. Accountants often have to clean up messes when a business grows and the original structure no longer fits. Choosing the right business entity can save thousands in taxes and provide better legal protection. Accountants recommend re-evaluating your structure as your business evolves and checking in regularly to make sure it still serves your goals. 8. Financial reports are more than just paperwork. Profit and loss statements, balance sheets, and cash flow reports aren't just documents to file away. They're tools for understanding your business. Accountants wish business owners would use these reports regularly to make informed decisions. These statements reveal trends, highlight inefficiencies, and give you a clear picture of what's working. If you're only reviewing reports at tax time, you're missing opportunities to pivot and grow. Successful business owners treat their financial reports like dashboards for their business, not just obligations for the IRS. 9. Ignoring deadlines can cost you big. Tax deadlines, filing dates, estimated payments, these aren't optional. Accountants frequently see businesses hit with penalties, interest charges, and cash flow issues simply because they ignored important deadlines. Missing one form can cascade into other problems, like revoked licenses or IRS audits. Accountants want business owners to treat deadlines as non-negotiable. Using reminders, automation tools, or even outsourcing compliance can help ensure you stay on top of all key dates. It's not just about avoiding penalties, it's about running a responsible, trustworthy operation. 10. Your accountant is a strategic ally, not just a tax preparer. Perhaps the biggest misconception accountants want to bust is that they're only useful for filing taxes. In reality, accountants can be one of your most valuable business advisors. They can help you with budgeting, cash flow forecasting, growth strategy, succession planning, and much more. Business owners who regularly consult with their accountants tend to make more informed decisions and grow faster. If you only talk to your accountant once a year, you're missing out on a wealth of knowledge and insight that could take your business to the next level. Running a business is hard enough without flying blind financially. Accountants aren't just there to handle your taxes. They're there to help you build a solid foundation and grow smartly. From managing your cash flow and staying compliant to using your reports wisely and planning for the future, the advice they wish you'd follow could be the difference between barely surviving and truly thriving. So, if you want your business to succeed long-term, treat your accountant as more than just a tax time contact. Make them a year-round ally in your entrepreneurial journey.